how is it that we could have oil and gas stocks outperforming the biggest technology semiconductor names out there? Is this a trend in value-oriented stocks that can be sustainable over the longer term?
So, Dom, I'm going to give you a short answer and say no. It's not going to sustain over the long term. However, we are in a situation where we are seeing that rotation into value. Value has underperformed, as we all know, over the past decade. And we've seen, at least at Loop Capital Markets, with our institutional investors in particular, since the end of last year, a tremendous rotation into these value-oriented stocks. So it's a situation where I think we're seeing that pickup, and we're seeing those names begin to finally add value in folks' portfolios, which is a good thing. But be careful, because you don't want to be out of these growth stocks, because this run is not over.
The run is not over, John. That's what Courtney is saying. Is that kind of jive with what you're thinking right now? Do we have legs for this rally? Can it continue? Should people stay invested?
Yeah, of course. They should stay invested, especially in an interest rate environment of a 1.7% Treasury. Now, what we're seeing from our equity team, though, is just like Courtney's saying, our equity team did a package of value stocks they brought into portfolios in February, but they're still they're not getting rid of their technology, their healthcare stocks, et cetera, in the different growth areas of the economy, or those FANG plus M's. They're just trimming and incrementally adding. We think that's a prudent thing to do. Courtney got that right.
So John, if I could follow up on that then, you mentioned that you've been adding certain types of stocks there. What exactly are the characteristics you are looking for some of these more value-oriented stocks, and what exactly are you putting in client portfolios?
Well, think of it this way. So material sector. So our team added Dow Chemical. They added Freeport-McMoRan, 4 different base metals, and base chemicals, I guess you should say. Then also they added Caterpillar and Deere because of the spending we're seeing, not only in the infrastructure sector, but in the farming sector right now, or anticipated spend that we're seeing. Then they added a Chipotle restaurant and a Hilton hotel for people coming back out in the economy. So those are 6 of kind of broader package that they added into those portfolios last month. They did a good job. So
Courtney, with that in mind, if we do think that there's going to be a general trend towards having some of these value-oriented stocks be part of portfolios, what exactly would you be looking for in terms of characteristics and factors, and what are you putting into client portfolios right now?
Well, Dom, I think for us, right, at Loop Capital Markets, we're an investment bank and broker-dealer. So we're watching the flows of some of the largest asset managers on the planet. And those managers, if they have the ability to have a balanced portfolio, the value names in which they're in right now are names that you have a bent towards either technology or a resilience in a rising interest rate environment. And they're positioning those portfolios, Dom, and I want to be clear, not for right now, because I do believe this is a slight blip. When we see 2022 coming in, and the Fed has kind of indicated this to us, inflation is going to peel back a little bit, right? We have a base versus last year, which was horrific. And so when we think about a rising rate environment kind of post-2023, some of these names should perform well, and these value names should outperform, whether you're talking about some of the financial names or, yes, whether you're talking about possibly some of the industrials that we're seeing out there. So I think we're seeing kind of that rotation picking up now, or had picked up, obviously, before this massive run, and they were positioning the portfolio for this time right now. We're actually seeing clients going back to some of those growth names that have been hit way more than they should have, but have a potential for growth as we move forward. So whether it's a Square, whether it's a PayPal that we're thinking about here, or even Facebook, candidly, you've seen names that honestly have a business case for success, not in the short term as we're seeing some traders trading in and out, but for long-term investment prospects, and you don't want to miss it.
Sure. So just a few moments left here, John. We'll give the last word to you here. Do rising interest rates give you fear? Just about 15, 20 seconds.
Yeah. Coming into the pandemic, we saw a 10-year Treasury yield in the 1.5% to 2% range. If it goes above 2%, it's probably going to take a run at it. If it goes above it, yeah, that's going to spook the stock market because now we're in territory we were not in prior to the great pandemic. So that's something our fixed income team is watching at Huntington.
Shepard Smith here. Thanks for watching CNBC on YouTube.